Hello, my name is Steve Bigelow with the Candlestick Forum. We're going to do a quick analysis of the McMuffin candlestick pattern. This is a very highly effective trend reversal signal. The McMuffin is a combination of the MorningStar signal, which is one of the 12 major reversal signals, followed by a Doji sandwich, or a morning sandwich we call the McMuffin. The MorningStar signal, being one of the 12 major signals, in itself is a high probability reversal based upon 400 years of the Japanese rice traders identifying what happens in human nature. The Doji sandwich is very easy to identify. It's usually a large signal, large candle, a doji, and then the large candle that is the same magnitude as the candle prior to the doji, with the doji sandwiched in between. This produces a high probability of more upside. So when you combine a Morningstar signal, one of the 12 major signals, followed by a doji sandwich, which is also a very strong reversal indicator, that's double the probabilities that you're now in an uptrend. Visually, the Morningstar signal is very symmetrical. A big down day, a day of indecision, such as a doji, a big bullish candle that closes more than halfway up that first dark candle. And with this all occurring in the oversold condition, becomes a high probability reversal. Add to the fact that the T line, the 8 exponential moving average, it closes above that level, additional probabilities we're in an uptrend. The next day, being a doji type day, we have a very simple rule of the doji. The price will usually move in the direction of how they open after a doji. So witnessing a positive open indicates we'll probably have that candle there, the same magnitude as this candle right here, which gives two pieces of information. One, that the T-line is not going to act as resistance anymore. And two, that this day right here is going to take us well up above the T-line starting the uptrend. That pattern becomes very effective for identifying when there's been a change of the overall markets. Once again, a Morningstar signal that moved away from the T-line, a doji sandwich up through the T-line, high probabilities that that signal is now producing an uptrend. And we demonstrate it today because one of our recommendations, MAXR, was based upon witnessing a Morningstar signal in the oversold area, followed by a doji type day. There's two ways to enter this trade. One, if you use the doji rule, you can be buying on this positive open, expecting this type of magnitude. So even day traders can take advantage of that high probability pattern. Or two, if you don't discover it until the end of the day, we know the results of a Morningstar signal. We also know the results of a doji sandwich, more upside. You combine this two, it produces a high probability of more upside with the identification that a J-hook pattern, wave 1, wave 2, now going into wave 3 gives us a high probability that wave 3 will be the same magnitude as wave 1. Candlestick investors can utilize that information to put themselves into a high profit trade or a high probability trade. So as you saw in today's market, when things were fairly lethargic, the McMuffin pattern was still working. Thank you for listening. We'll see you in the chat rooms.